Hi, everyone. Thanks for the introduction, Andrew. Allow me to introduce my panel. On my left, we have Mr. Anoop Singh, Regional Head, Tanker Research, Braemar ECM Shipbroking. Next to him is Mr. Arjun Batra, Group Managing Director and Shareholder, Drewry Shipping Consultants. And on your far right, we have Mr. Sorry, I got it mixed up. Mr. Rahul Kapoor, first from IHS Markit, Head of Commodity Analytics and Research. And on your far right, we have Mr. Arjun Batra. So without further ado, we have a very esteemed panel here. And my name is Chih. I've been a very diligent Marine Money audience member for the past decade. And as guided by Alex, we are finally looking like we are going to enjoy some sunshine across the shipping markets. Contrast this to many a Marine Money which I have been, where we saw many rainy days and many rainy outlooks. So amidst this brighter backdrop, everyone knows in shipping that good times don't last, neither do bad times. It's a cyclical market. My first question to the panel is this a start of a super cycle like what we saw between 2004 to 2008, where owners go on to enjoy a 4 to 5 year bull run? Or is the next downturn just around the corner in 2023? Arjun, you've seen many cycles. You're the most experienced amongst us panelists. You've seen many ups and downs. What is your read on this?
Well, one of the benefits of being in shipping a long time, it makes one a pessimistic. Yeah. So, but broadly, I think we have to look at the fundamentals pre-COVID before we address how we go forward. Because COVID, well, we don't know what curveballs we've got coming in the next year, but clearly at this moment we are in the COVID reopening trade, which has its own this thing. But just fundamentally looking at the market pre-COVID, I think we have to look at the fact that we had two fundamental issues. We had almost a decade of poor markets for shipping across the board. Two, we had this decarbonization, technology, engine issue. So the result going into COVID, broadly, we had low order books, but we also had very poor balance sheets for ship owners across the board. COVID came, lots of disruptions, et cetera, and now broadly, I think we are in the reopening trade, lots of inefficiencies, congestions, et cetera. So fundamentally, I would say my own view would be that the reopening trade by the middle of next year should work itself out. Now, the sort of the needle in the haystack or whatever is the EXXI, CII rules which are coming 1st January 23, which is going to slow the global fleet down, which is actually a reduction in supply. So that's a positive. But against that, I think macro fundamental trends, in my view, are things like a reversal of globalization. You know, I'm a very strong believer that pre-COVID we had started a reversal of globalization, which is nearshoring, reshoring, diversification, risk management, etc., which fundamentally I think will have a reduced growth in shipping demand. So that's the negative. And yeah, so I'm not a buyer into the super cycle. I think the markets will normalize. And now each sector is going to behave differently. I think the markets will normalize by middle of next year. Fundamentals will come back into play. The oil tanker markets will be affected by the decarbonization move. Dry cargo, yes, you know, the order books are low. Containers, I think there's been lots of exuberance, lots of ordering. I'm a little afraid about that. But yeah, I think there are better times ahead, but I think some markets have become over-exuberant.
Thanks, Arjun. So just echoing what Arjun said, and I've always been a big believer in the supply side which drives profitability, right? If we had to take off the COVID impact, all the sectors which we are seeing right now would be probably 40 to 50% lower. Container, I recently did a conference and it's a gold rush out there. You're talking about 3,000 TEU, 5,000 TEU up 5 times, right? So there's an asset bubble on the container shipping market. $24,000 per TEU rates are not sustainable. It's the supply side which is driving those rates. You can't find a container. What we are seeing right now, particularly in China as well as the US, is this COVID non-stop, as in the stopgap arrangements, right? Just one case and you shut the port down. You can't get anything on the land side, chases problem, supply chain. So as all of that plays out over the next year and a half, we would see a significant decline in rates, as well as on the asset side, on the container side. But having said that, what we are talking about is the profitability curve of the market has moved up. So even if the rates were to fall from $20,000, even let's say to $5,000, that's highly profitable for the container shipping companies. So right this year we're talking about $100 billion, maybe they make $10, $20 billion over the next few years on an annual basis, but that's still very, very profitable. Coming on the dry bulk side, again, one thing which we are not giving too much attention to is the fallout of the container market on the smaller segments. When you're talking about handies and supras, right, the demand hasn't been that great. If you look at the iron ore side, others as well, it's above trend, but it's primarily being driven by the congestion side. So if you again remove the congestion side, rates would be lower. Now what we are looking at the last 10 years, and Arjun alluded to some of that, is the supply side, the decarbonization, what the owners want, the newer economic vessels, as well as the availability of the capital is still only available to the best of the owners. We haven't seen a cycle start for dry bulk. And normally you would expect, but containers have taken a lot of capacity. You have other segments as well. So again, for the dry bulk, we are expecting the next 5 years, the next 5-7 years to be materially better than what we saw in the last 10 years. So overall, if I had to just sum it, I think we are in better times ahead, but what we see right now, I think that's unsustainable.
Thank you. So no real super cycle, but a reversion back to sort of the normal cyclical shipping markets. Anoop, you obviously cover the tanker sectors, which is going through a rough patch. What are your thoughts on this? Go ahead.
Gives me the full liberty to be optimistic, right? How bad can things get from here, right? Yeah, so if we wanted to sort of put on the most bullish glasses, I'd say the supply side on the tanker market looks really interesting. You got a large swath of ships which are over 15, 17, 18 years of age. Typically they would scrap. The positive sentiment on the dry bulk and containers has sort of booked the yards out. You go want to buy a new build tanker, you wait till 2024 or sometimes 25. Yeah, so that's kind of the the best sort of best parts of the tanker market. COVID has also sort of reshaped the refining landscape, right? So we've seen lots of closures in capacity in the US and in Europe. So these are big demand centers which are not deficient in supply. So certain pockets of shipping look very promising, yeah, because of supply constraints and the fact that refining landscape is shifting. But then we start to sort of put these broad drivers into our models, and we see that the tanker segment which matters, which is the sort of big ship crude markets, their utilization we think recovers to pre-COVID levels somewhere around 2023, 2024. The EEXI sort of needle in the haystack that Mr. Batra mentioned could advance that timeline, by a bit if ships tend to slow down. But yeah, we sort of see a recovery back to those levels, maybe 23, 24. But I certainly don't sort of see the further dip in values, yeah, yep. Which was kind of on the last slide. So I'd be quite interested to understand the basis of that.
Yeah, so I think the VMR forecast was actually still pretty bullish for asset prices. If you think about a 5-10% drop in container prices, it's nothing compared to where the levels are at. Thank you all for your thoughts. Moving on to the agenda that we have here today, challenges and opportunities in 2021. Maybe I can tackle the challenges of this question and then pass the opportunities on to the panel. I think in terms of the challenges, the landscape for ship owners have changed drastically over the past 20 years. At least in my time when I joined shipping, regulations used to move at a much slower pace. We had gradual single hull phase out, maybe introduce ECA, sulfur emission control areas into certain localized areas. But now so much action has happened in the past few years. We've obviously had IMO 2020 occurring on a global scale. and across all most ship owners, ballast water treatment system, IHM. Now we've got EEXI coming in, IMO 2030, IMO 2050 carbon emission targets. Now, if a ship owner wants to go and order a ship in a new building yard today, he has to think about high steel prices, new building prices. What sort of premium am I going to pay on my dual fuel engine? Should I be LNG ready? Should I be scrubber? And if you throw on the uncertainty that COVID has generated, will the COVID vaccines rollout be successful? There is so much demand uncertainty as well. So with all that as a challenges backdrop, and obviously shipping is a wide industry that encompasses many participants, maybe we can start with Rahul. What are the opportunities that you see for the ship owners and the ship operators?
Yeah. So I'll point towards what the Maersk CEO said, I think 2-3 days back, right? So he called for all the fuel burning ships to be banned by 2035. I think that gives us an indication that the strong will get stronger. I think it was very difficult for the Maersk CEO to probably say it 3 or 5 years back. But having built the balance sheet, having built the cash buffers, the weaker players will likely be priced out of the market, right? I think they will face significant challenges. And we at IHS Markit work with a lot of SCC or the Sea Cargo Charter signatories, and we are seeing that decarbonization push. Everybody is going for the digitization, better visibility on their carbon emissions. I believe the same is happening on the lending side as well. So overall, I think it's essentially the stronger get stronger. I think a lot of speculative ordering, the marginal players which were there in the last cycle or the last 10, 15 years would find it very difficult to survive in this market. And what that essentially does is higher rates, and the cost curve or the profitability curve for the industry continues to move up.
Thank you. Anoop, you obviously cover the tanker markets ranging from owners with 5 ships and owners with 100 ships. How do you see sort of SMEs versus large players? I guess they will be strong, small players as well. So will these guys, do you share a similar sentiment to Rahul as well?
Yeah, I think for the big players, the opportunities have always, the size, brings access to capital, access to markets. What size also now brings is an ability to set the tone on technology. And I think Rahul mentioned how Maersk was sort of, setting the tone for that. So that opportunity is also kind of linked to access to capital. Yeah, because if you look at what's happening on the oil and gas space, if you want to drill a new well, your cost of capital is 20%. If you want to put a renewable plant, your cost of capital is 5%. All right. So as the larger players have the ability to drive the agenda on technology, they also have the the long run benefit of lower cost to capital. And I think what was also sort of working in the favor of these larger players is an ability to leverage the best that modern data science has to offer. And I think there's a lot of headroom to catch up there. There are very few sophisticated large pool players who are leveraging that piece very well. Unfortunately, many of these traditional large product tanker operators or even dirty operators, they're still not there as yet. So that's a big opportunity for growth. Amongst the SMEs, I think they're kind of probably will remain on the margins as S&P second-hand resale values. Yeah. And there, I think the charts that Alex brought up were quite interesting. We see value at a 10-year-old Aframax is trading 30% below its recent peak. We see a 10-year MR trading at about 8% below the recent peak. So these, and that's where the S&P transactions have also been kind of heavy. I'm a little bit surprised that we are not seeing more 8, 9, just pre-dry dock vessels, being transacted. Because that seems to be an opportunity to get a good, well-built and well-managed vessel, maybe a Japanese vessel, or and very well managed. And so that represents a good opportunity for the SME players, to continue to go. I don't think the tanker business will lose the SME players. I don't think they're about to be moved out of that, moved out of the game. Yeah? It's been a market which has been perfectly competitive, which means it opens the doors to many players, and that doesn't change in our view. Yeah?
Okay. And finally, I guess we can move on to the charters and end users. How can they leverage on the challenges that owners have today for their own personal
I'll
interests?
just add one thing about SMEs. I've worked with them for a long time. You know, I think the SMEs bring a lot of value to the shipping markets. Liquidity in the S&P market, liquidity in niche markets, liquidity in the chartering market. So I think, and we all know that the shipping markets have consolidated quite considerably over the last 20 years. Most of the consolidation has been driven by poor balance sheets. And it's not because the small ship owners have done badly. It's just that the shipping markets have done badly. So I think, you know, with the recovery of the shipping markets, the SMEs have a role to play. Maybe they won't be out there building new ships all the time, but at a secondary level, they have a lot of value to add. Okay, just going back to your question about operators, charterers. I step back and I say, actually, the operator charterer is an intermediary. Let's just look at the customer, the end user of a commodity. We all know, and I'm sure in the next day, we will all be made more aware of how determined the consumer on the street is to get environmentally friendly product on his table. He's willing to pay today. So he is the person who is dictating where commodity is coming from, how it's going to be determined. So I think the reality is our operators, charters of today will be dictated by the end customer of how they need to operate. And so that's one level. So I think being environmentally friendly is going to be an incredibly important element. Secondly, I think if we look at shipping altogether, there is a lot of efficiency which can be brought out using technology, which hasn't been done as yet. You know, we're all in the bulk market still so determined to be on the spot, et cetera, which has various other issues where efficiencies can be brought. The third emergence today is of the e-commerce players. They're big boys. They are really interested in factory to customer supply chains. The days of, looking from export to Y port and then say, they have a very different mentality. So all I'm saying is I think shipping has to adapt to that, not them adapt to shipping. And if we in shipping do not adapt, they will backwardly integrate and come into shipping. So I think that's the reality. Now, so where is the opportunity? I think the opportunity is for like-minded ship owners and operators to integrate with the people looking for an efficient supply chain, an environmentally supply chain, is to be there, integrate with them and give them what they want, not look what they can give and for the customer to choose what is the best. I think we have to change our mentality then. So I think that's the opportunity for a ship owner to rethink how he's going to provide his service.
Thank you. Sounds like a lot of cooperation and collaboration required for the future. Now, moving on to sort of the previous hot topics of Marine Money Singapore. Obviously, the last time we had a physical event of this size before April was in 2019. And the hottest topic then was IMO 2020. Everyone was forecasting IMO 2020. It's going to be slow steaming, scrapping a lot of older vessels, which we haven't really seen due to the strength of the markets. In addition, bunker prices in 2019 on HSFO was $420 per ton. And with the collapse of oil prices last year, we saw VLSFO trading $50 per ton cheaper than HSFO. With oil prices rising again back up to sort of $550 per ton today for your VLSFO. Maybe Anoop, you can share with us first on sort of oil demand. Where is it going? When will we see it return back to 2019? Before we move on to maybe Rahul and Arjun to take on the questions on scrapping and slow steaming.
Unfortunately for shipping, for tanker markets, scrapping hasn't happened fast enough, right? Going back to the question on oil demand, I think COVID has already created some peaks in oil demand for certain commodities, right? So, for instance, the largest user of gasoline in the world is US. So that's peak demand, right? We passed peak demand. The largest consumer of diesel in the world is Europe as a bloc, and we certainly passed peak demand there, right? So now, for shipping markets, it's a question on what declines first in these markets. Does domestic supply of gasoline in the US and diesel in Europe decline first? Or does demand decline faster? What declines faster? So there is, in our view, there's a little bit of a window of opportunity, 3, 4, 5 years, where supply will follow faster before the drop in demand really accelerates with the green transition. Yeah. And what it has also done, COVID has also done, is it has moved the discussion on decarbonization, many steps forward, right? And as COP26 happens in October, we are likely to see even more aggressive targets being set for oil demand, including in places places like India and China and parts of Southeast Asia, which combined, this part of the world, our part of the world, accounts for 50% of global carbon emissions. So US and Europe doing their bit will never be enough. So we will have to join. And so which means it does raise question marks on where will long-term oil demand be, even places like India and China.
Rahul?
Yeah. I think the ship owners have been proven right? So we've all been asking the scrapping to increase over the last few years, but I think this COVID, what we have in the market right now, this probably is going to push back scrapping for years. I think the balance sheets have been buffered up, very strong cash flows, and like we're all expecting the rates to stay at a significantly higher level. So I think scrapping would be difficult for the next few years. So I am not a big believer on scrapping over the next 3 years. I think the rates at $30,000 for Capesize, unlikely that the scrapping would be huge. And containers, certainly not.
Arjun?
I think that's completely right. I think the issue of high oil prices and CII coming in together, this together, high oil prices will reduce the speed of the fleet. Now, when the fleet speed reduces, actually it constrains supply, which pushes up freight rates. So I think what we're going to see is probably a larger differential between an eco ship and a non-eco ship. But I suspect a non-eco ship is also going to make sufficient return that he's not going to scrap. So I think scrapping is, in an environment of CII and high bunker prices, is probably going to be very subdued.
And scrubbers will come back into action, presumably with this larger, higher oil price.
I'm a believer in scrubbers. I think, the scrubber, in my view, the scrubber era is over. What's done is done, but I think it's going to be hard for owners to justify, or even regulation to allow them to use scrubbers not use scrubbers, but install them, would be my view.
Okay, thank you. Moving on to the hottest topic for 2020, which was COVID. Obviously, COVID's been mentioned several times already. Originally, when COVID first came, people tend to equate COVID with bad for economy, that's bad for shipping. But as we analysts know it, there will always be winners and losers for every exogenous factor that is introduced into the shipping market. As presented by Alex earlier, the winners originally in 2020 were tanker markets with floating storage, while bulkers and containers were the losers. This has kind of flipped. And I guess looking ahead to 2021, rest of 2021 and 2022, what are your thoughts on the winners and losers in terms of COVID? How long do you foresee COVID to last? Fleet inefficiencies, congestion. Anoop, would you like to start first?
The virus has stayed a step or two ahead of the vaccine so far. So it's a little bit difficult to say, when will the post-COVID world arrive? A couple of weeks back, there was a nice graphic in the Financial Times which showed how quickly immunity was falling off, in months after vaccine. Even the best vaccines, in quotes, Pfizer was half as effective in 4 months, right? So we're certainly not, at the end of COVID, right? So it's going to be a little bit difficult. In terms of the winners from COVID, tanker markets got a little bit lucky because just as COVID happened, so did the oil price war. So we had the big spike in floating storage, which kind of shielded tanker markets for a bit. Going forward, the most sort of seminal effect of COVID, we think, which will affect tanker markets for the long run, is going to be the shift in refining landscape. Number one, positive for clean tanker markets. And it's also going to accelerate the green agenda. So we think that, China will, our modeling suggests that in 2015 to 2019, 5 years there, China's demand for tankers on an annualized basis grew at 10% per annum. Yeah? And we think over the next 5 years, China will grow, but it'll grow at, China's demand for tankers will grow at 6%. Yeah? So there is certainly, a slowdown happening. Yeah, India is growing faster, but India never, really drives the tanker ton miles the way, China could drive. Yeah, so that's, I think that the sort of the beneficiary, so to speak, is certainly going to be the clean tanker sector. But clean tanker sector doesn't survive on its own. There is nothing called a clean tanker utilization which drives clean tanker rates. Yeah? It has to be always what the big boys are doing. Yeah? So in that context, even though great environment for clean tankers, but till the dirty tankers, do a little bit more than where they are now, we don't see that benefit coming into the clean tanker market for a bit.
Rahul, winner and losers?
So two parts to this, right? So for the container shipping, I think we were earlier expecting everything to ease off in the second half of this year, but just yesterday we saw around 60 odd vessels waiting outside of Los Angeles Long Beach complex, right? So it just continues. We're not expecting anything before the Chinese New Year, but like I said, with the new variants coming in, till the time vaccinations, the whole population is vaccinated or a larger portion, I think container market will remain stretched. Right. I think what I'm more worried about in the longer term is the dry bulk market. In a sense, I think what we are seeing, particularly with China, on the real estate side, I think that's a bit concerning. They're trying to control a bit on the leverage as well, but the supply would support. So this year, in my view, is probably the peak earnings will start to go down over the next 2-3 years.
I'll take a little more philosophical view. I think the losers will be those who believe that reopening trade is the new normal. And the winners will be who look a little longer term at the macro trends. So I think those who are buying assets today at hugely inflated prices, expecting that to be the long term or even medium term, will find they have overextended, and vice versa. So there are opportunities, but I think sitting today, I wouldn't go and buy a dry bulk because I don't believe the values are truly reflective of the long term or passive. And similarly, a container ship. I mean, we've seen so many new orders on container ships filling up the yards. So I think the reality is the losers, in my view, would be the ones who've looked at today's market, the reopening trade, and invested. Those who've just sat tight have enjoyed this bubble. And those who are taking a longer-term view, and the longer-term trends are decarbonization, technology. These are opportunities for investors still to. There's lots to be done there. So I think it's more philosophical rather than a sector view.
No, thank you for sharing your thoughts. I guess finally this brings us to the hottest topic for 2021, which is ESG. And we couldn't go on through this panel without talking so much about it. We obviously have panels later on carbon trading, alternative fuels, and sustainable financing. Obviously, we're looking at Braemar, Drewry, IHS. You guys are at the forefront for all sorts of client requests. Without stealing too much of subsequent panels, information and content, I would love to hear sort of your insights on this. Perhaps any research piece that you've been working on, any initiatives, or maybe key trends and themes you see based on just the sheer amount of client requests that you see on this front. Maybe we can start with you this time, Arjun.
Yeah, it's public knowledge, but we as Drewry have just recently completed some work for FinSmart, which is a roundtable of IMO, World Bank, EBRD. And, of course, as expected from most Drewry reports, it's a huge, long, lengthy document. But fundamentally, I think the findings, and I think none of this is new, I think all stakeholders are aligned and want decarbonization, environmentally friendly. I think there is no doubt in our mind. I think there is enough ECG capital available or wanting to be deployed. I don't think that's a shortage. I think the issues really are, as of today, alternate fuels are economically not viable. The cost is incredibly high. Clearly, lots of investment is still needed in R&D research to make these alternate fuels viable, and including the engine, and then scale up so that you get value of scale. Yeah. And clearly somebody has to finance it, and really the issue really is all the government agencies, multilateral, we all need to get, all stakeholders have to align to get this going. But the desire is there, and I think action is being taken for that. There's no doubt in our mind for that. Our view is clearly short sea is probably going to be the first area where decarbonization, et cetera, is going to change. And I think the third thing, the final thing, is carbon tax is probably going to be essential. And there seems to be, at least now, opinion going down that way, because without the tax, we need regulations, clearly, but there needs to be an economic incentive to make these alternate fuels viable. And I think from my perspective, carbon tax has to be the way to go.
So I think, like we said, COVID is probably a 18 months, 24 month story, but decarbonization is the next 10 years, 20 years, right? Once we're out of this, we'll only be talking about that. So we at IHS Markit, like I said, we work with the SEC counterparties or the signatories, like, let's say, example, Trafigura or Shell, right? We are in the real time tracking their emissions, right? So the industry, as well as us provider, the intelligence or the data providers, are working with them in the near real time and giving them that data, feeding it back and creating a repository. I think that's been done in the other financial markets. We are doing it for the shipping side, and that's where the future is. If you have a certain vessel which gives you a better carbon emission over a period of time, you can probably ask a lot more for that than a poor emission vessel. That's where the industry is going.
So we've had a lot of interest from clients, understanding what's going to be the regulatory space and the market space. So that's kind of where our focus is on. Also, identifying what are the global emissions coming through from the tanker fleet, whether there's a difference in carrying a cargo on A vessel versus B vessel. For people who are ESG minded in their S&P deals. So we're doing that kind of work as well. For us, the kind of more interesting question that has sort of emerged over the last 6-8 months is this shift away or this perception that LNG is now a thing of the past. Yeah, and so that's coming through more and more in our dialogue with the clients. And it used to be that in a month I would get 3 requests, 4 requests on can you give us your LNG dual fuel brief, right? And we hardly see that at all. And so generally the interest is now drifting towards methanol and ammonia and things for so on and so forth, which kind of surprises me personally a little bit, because if you look at on the shore side, the largest driver for reduction in EU's carbon emissions through 2018, 19, 20 was carbon markets. So they put a price to carbon. But the first industry to react there was power sector, and the switch was from coal to gas, right? So the switch to gas has been a really positive thing, and together with carbon markets, has been a really positive thing to drive carbon emissions lower in Europe. So I'm a little bit surprised why, so questions in our mind, right, is will shipping completely skip the gas phase, and go completely to the ammonia phase or not? I'd be a little surprised if that's the way the industry moves. Yeah.
Just one last thing, CC, I wanted to add. So I think it's going to be very inflationary, right? I think we're looking at the coal prices where they are 13-year highs. We're talking about the green steel, right? So all of this decarbonization is going to be hugely expensive. We're talking about hundreds of billions of dollars, right? So who's going to pay for that? I think we don't have answers to that yet.
Thank you. Maybe just a final question to set up for the next panel. John Chen, my colleague, after this. Just a simple yes/no answer, maybe with a short explanation. Could you possibly see, for example, if an owner goes out to order a new build vessel today, extremely fuel efficient, typical consumptions are X for this vessel type is now 20% below X. Could this vessel then sell this 20% X lower carbon credit to, say, a owner of a 25-year-old vessel who's consuming 20% above X? Could you see this happening sort of by 2024? Rahul, why don't I start with you? Yes, no.
Difficult answer. So I think there are no frameworks as such, right? It could be yes, it could be no. It depends on how desperate the other guy is to get this. So very difficult for me to say yes or no to this.
I think 2 years is too early because even under EU, which is the most advanced, the Fit for 55 is not ready. There are no rules. And secondly, the shipping markets is a global thing. So you will have the energy efficient ships trading into Europe and the rubbish trading into different parts of the world. So I don't think 2 years, maybe 5 years, possible.
I think what we're seeing is slightly different. Yeah? Well, we set up a carbon trading desk, carbon broking desk, within Braemar, right? And there's already interest among some charters to offset emissions. Our sort of base case view is that European ETS is up and running by 2023. Yeah. So slightly different views, but coming back to your questions, you see, on whether we think that a very fuel-efficient vessel can sell its carbon in the market that is visible to us as of now, 2023 Europe, the most likely regulation that will emerge is 50% of your emissions have to be offset. So your allowance is 50%. So unless your fuel that you use is already giving you a 50% benefit, which means if you're an ammonia-powered vessel, yeah, you have zero emissions, right? So you can then go and sell your entire fuel 50% of your fuel consumed as emissions foregone into the market. But that's sort of carbon offset credit. Yeah, it's not a carbon reduction credit; it's a carbon offset credit. Yeah. The structures will have to evolve around that. As of now, there isn't an assessor who assesses offset or credit for shipping emissions. Yeah, we don't know as yet. There's none that we know of. The largest assessor is Chicago Climate Exchange, and they don't assess shipping emissions. So we need to have those structures in place before we start to see, a real carbon market emerge for shipping.
Thank you. I think that about sums it. Are we doing a Q&A or? No Q&A. All right, thank you so much for the panel. I hope you guys enjoyed it. Thank you.
Thank you.